Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. So this time we have the one of the weeks when the technical situation is not as interesting as the fundamental one. So in the fundamental analysis today we have trying to shed some light on background, and as usual you could read our view in the report, but in two words speaking, those of you who are lazy to read the report, so we said that currently the financial statistics and data on the economy performance takes the secondary place, because the major thing that is currently the major determinant of the performance of the currencies is the geopolitics. It's just because of the few moments. So you could watch for inflation, the intention of European central banks to change the rate or maybe issue the bonds to finance the energy independence and increasing the defense spendings. But the situation is controlling by the United States. And the economy of the United States stands in a very difficult situation. And if you will see the domestic political situation in the United States, you will see that Democrats are losing the ground, as Wall Street Journal wrote recently. In such circumstances, the situation in Europe is very fragile, and in any moments when it could be seen that European economic situation is destabilizing, if it will bring some potential hazards to performance of the United States economy, United States could go on escalation conflict in Europe just to support the economy in the United States, increase the flows of the money out from the European Union, and to make longer the period when the economy in the United States will feel more or less better. So that's the real situation stands. That's why we should not be deceived with different statistics and the intents of the European Central Bank to make some measures which has been treated hawkish in last week. Because in fact, what will happen with the European Union, what will happen when the euro stands actually in the hands of the United States. And of course, for the United States, their own interests stand much more important than the stability in the European Union. So this makes us to be skeptic on any suggestion of the stabilizing of the situation and that euro could turn to the upward rally just because the European Central Bank intends to increase the rate. It should stop the bond buying program, and that should support euro. Yes, indeed, this might happen, but only until the moment when these measures starts to hurt the recovery and stability of the United States economy. One day we will see it. It definitely will take some steps on the military escalation and more destabilization situation in Europe, just to support this running into the safe haven, which is of course the United States dollar currently and the treasury bonds. This is our view, and that's why we do not expect the real reversal in the euro currency, although tactically in some moments solid pullbacks might happen, especially if, for example, European Central Bank changed the rate. Some retracement might happen, but we suggest that this will be tactical, and hardly we could miss that situation when actually euro will keep going to our next target. So all this stuff makes us keep watching for 105 target and on the parity. We think that it might be achieved within this year. So this is just speaking shortly on the fundamental background. If you would like to know the details, as I said, you could read the report. On the technical side, as I said in the beginning of the video, we do not have lots of issues. So first of all, our bread and butter trade is mostly completed and actually already has reached the target. But if you still keeping the short position, be focused on the previous lows. Just because in the current circumstances, we suggest that market hardly will move below the recent lows. It is really high degree that the high chances that a market will spend the coming week in the same range. It's just because market is oversold on the weekly chart, and well, from the technical point of view, the chances on the immediate breakout and further downward continuation stands not very high. But at the same time, because of the oversold area right here, we call you to consider probable booking of the result of the bearish position somewhere around 1 or 8 lows. This will be the classical, classical suggestion, classical recommendation when you're dealing with the oversold market on the weekly chart. You could trade inside the range, but think about grabbing the result right at the borders of this range. So that's what we have on the daily. Unfortunately, on the daily chart, we do not have any other patterns. So here we need time and wait when the market will form another some trading setup. But on intraday charts, it seems that we could focus on the same ABCD pattern. So it seems that the OP mostly is done. This is the minimum target that we suggested on Friday. But take a look that in general on the CD leg we see the acceleration. It means that chances to see the XOP somewhere in the coming week, especially if rate will be changed by the Fed, it seems, well, very probable. And if you would like to continue trading with this setup, once the OP will be reached, keep an eye on this possible resistance level. So first one is 109.50, 109.80 confluence resistance. That two levels probably might be suitable to consider second entry in this trade with a possible target around the XOP. That's approximately the initial setup that we intend to keep an eye on through the week. Well, currently, but not see any reasons why it can't be completed. So that's our position on the euro currency.